Okay, it is, 4:06, calling the meeting to order of the District Group Health Insurance Committee meeting on September 29th, 2021 at 4:06 PM. We'll do roll call. Let's go ahead and start with Jeff.
Present.
Eric Diamond is not here. Mike?
Here.
Okay. And Rachel?
Here.
Okay. Serlina?
Here.
Diana is not here yet. She will be, hopefully. Tony?
Here.
And other Tony?
Here.
And Dawn Miller is absent. She wasn't. It's okay. It's all good. And it's all good. Okay. We have a quorum. We'll go ahead and get started. So items for public comment. I don't need to read this whole thing, do I? No? Okay. Do we have any public comment cards turned in? Okay, seeing none, we'll move to 2.01, approval of the minutes from the May 27, 2021 meeting of the Group Health Insurance Committee. So I'll give people a minute or so to look over those minutes, and I heard there was a possible correction, so. Okay. Any corrections?
Approval of the minutes.
From the April 22nd? No?
No, it wasn't from the April meeting.
Okay. Well, I'm looking at. Okay. So is there a motion to approve the minutes from the May 27th meeting?
Jeff Balzo, I move to approve the minutes.
Is there a second?
I'm sorry, I just saw it.
Okay.
It says the next meeting of the group insurance is for Thursday, May 27th, and the date of the minutes is May 27th. So,
So, well, but also that the date of the next meeting from the May meeting should have been in June,
Yeah.
okay,
So,
which we ended up canceling anyways.
right. Okay. So, there's a motion to adopt the minutes as amended. Okay. Is there a second?
I'll second.
Okay. All those in favor of adopting the minutes of the group of the May 27th meeting as corrected, all say aye, please.
Aye.
Anyone nay? Okay, it has passed. Let's see, 203, presentation and discussion of the Washoe County School District Group Health Insurance Internal Service Fund as of June 21st, June 2021. You do,
Yeah, but, yeah.
oh, sorry.
Approval of
I just want to approve them all at once, sorry. 202, approval of the June 24th minutes of the Group Health Insurance Committee. Give you a minute to look those over, see if there's any other things that need to be corrected there.
I move that we adopt the minutes.
Okay, is there a second?
I'll second.
Okay, it's been moved and seconded to adopt the minutes from the June 24, 2021 meeting. as presented. All in favor, say aye.
Aye.
Opposed, nay. Okay, so those have been approved and as presented. 203, back to the presentation and discussion of the Washoe County School District Group Health Insurance Internal Service Fund as of June 2021.
Hi,
Hi, welcome.
I'm Jessica Young. I am new to the district. I've been the controller for about 3 months now, so I'm going to go through this. I'm not as familiar with these financial statements as I would like to be, but hopefully this will all make sense. And I will do my best to answer any questions that you might have.
Thank you.
So I'd like to start with the statement of revenues, expenses, and changes in net position for the year ending June 30th, 2021. We saw that there was an increase in revenues for the year of about $5 million. But I wanted to draw your attention to a few things that are responsible for that increase. The most obvious thing is that we've actually moved a couple of programs into Fund 36 to account for life insurance and long-term disability insurance. So these are benefit programs that the district pays for, and they were being accounted for in the general fund in fiscal year 20, but a decision was made that it was more appropriate to move these programs over into Fund 36, or the health insurance fund. And so you'll see that there are 2 items in revenues and 2 items in the expenditure section. And so that increased the revenues by about 2.7 million. And then as far as the prescription rebates goes on the revenue side, there was an accrual missed in fiscal year 20, and we're kind of catching up on these rebates come in really late, so we have to make estimates in the current year financial statements. And so we did do those estimates this year, and so that's why it looks low in fiscal year 20 and high in fiscal year 21. Moving forward, that shouldn't be a problem. Okay, so if we eliminate these 3 items, it's really pretty flat year over year from 20 to 21. So the health insurance premiums, if we look at that section, when we moved from Hometown Health Plan to Anthem, we eliminated one of our plans, so that's why you see a 0 revenue for the EPO plan premiums. And if we look at all of the premiums together, there was a slight increase of about 1.6% year over year. And as far as the medical insurance claims, so we saw a decrease of 2.4% overall. And if we look back to fiscal year 19, we had medical claims of 52 million. So I think that we're really seeing medical claims that are being suppressed by the pandemic and people putting off certain procedures. And I think that if we're moving forward, people are going to be catching up on those medical procedures, and we might see an uptick. So also, I wasn't sure if everybody was familiar with the stop-loss payout. We see a fluctuation with that, and that is when certain medical claims exceed a certain threshold. It's kind of like an insurance policy for the district, and so we'll receive a reimbursement for those things. And so we ended up the year with an increase of about 8.8 million to our fund balance in in the health insurance fund, and so it brings us to about 37.8 million.
And I just have a quick question.
Sure.
The PEB premiums, those no longer, we're not getting money from PEB anymore, but the premiums are still deducted? I'm just not clear. Because I thought that we talked about them taking those out of the, when we used to get, we were getting money from the PEB program, and then that was taken, they decided to stop doing that a couple of years ago.
The OPEB trust fund?
Oh, yeah, OPEB, is it, or PEB, is that the same thing, or is that different?
The PEB premiums that are on this financial statement,
Mhm.
are you talking about the $3 million in
Yeah.
fiscal year '21?
Yeah.
So those are payments for retirees that are enrolled in the PEB program.
Okay,
And so we actually pick up part of that, and then the retirees pay directly to PEB the balance that we don't pay.
okay.
So that's not going anywhere until, since it is a closed system, eventually that will go away because there won't be any more people in it, but for now, it's going to be there.
I was confused because a couple of years ago, they were dumping, I shouldn't say dumping money, they were putting money into the program
Yeah.
during the recession and stuff.
Yeah, so we had some unhealthy years in the health insurance fund and needed some assistance, and so we had transferred $5 million a year over the course of 3 years from the OPEB trust fund to the health insurance fund. So that would have come in as a revenue, so this is something different.
This is different,
Yeah,
okay, thank you.
no problem.
Okay, any questions?
I have a quick question.
Go ahead.
When you say that 2 expenses were added to this fund by them, who do you refer to as them?
Well, it was just a decision to move, these expenses were in the general fund,
Mhm.
and there was a decision made that they were more appropriately belonged in the health insurance internal service fund. And so those are decisions made by the CFO, I believe. Jeff, you probably know better.
Yeah, so it's, just back up a second. So these were revenues and expenditures that were in the general fund, so both sides of the equation were, but it was more appropriately accounted for in the health insurance fund as an insurance benefit. So now we have line items for the revenues and for the expenses. So it's basically a net zero
It's a wash.
change to the fund, yeah.
And Diane Lyons, just for the record, has joined us.
Lion,
Sorry, Diane Lyon. Okay. Yeah. Okay, I think we're good. Okay. That's all. Thank you very much.
Okay.
Appreciate it. Okay, 204, presentation, discussion of the Washoe County School District Health Insurance Internal Fund Rate Stabilization Concepts and Health Insurance Internal Service Fund Concepts. I think that's the 2 slides that were on there.
Yes.
Okay.
So I'll do a brief introduction here, and then Lloyd from LP will be helping with the slides. So as we were speaking, we're kind of moving into a healthier season with our fund, and therefore the district is exploring ways to try to keep us in that area. Those of us who have been here long enough to experience some of the less healthier years know that it hasn't been a fun job to make some of the decisions of rate increases and decrease in benefit levels, et cetera. So now that we're currently anyways, in a place where we can start exploring our options of how we can keep a safety net, we're looking at a couple different rate stabilization funds. And our business office wants to make sure we're staying transparent and educating our committee on the types of funds that we might be looking at. Therefore, Lloyd is here to explain to us what those are and answer any questions, and I'll be available as well.
Okay, Lloyd?
Thank you. Good afternoon. Lloyd Barnes, Delphi Insurance, for the record. Thanks, Laura, for the lead-in. And this will be a fairly quick conversation. Again, we're still very much in the infancy of this conversation and this exercise. But as Laura said, the district has asked us to help facilitate some conversation around ways to look at their fund from a standpoint of how do we help stabilize the plan for the long term. It's one of the challenges that all self-funded plans face is as costs go up and down and bounce around as much as they do in our silly world. To the degree you can stabilize your costs and your benefits, that's obviously the best outcome, right? That's what we're all trying to shoot for, is 10 years of no increases and no changes in benefits. I mean, that's sort of that would be great. And so a couple of the things that we've been bouncing around, as I said, in a very preliminary manner, if you go to the next slide, are these two concepts of a rate stabilization fund, which is really, in its simplest term, just sort of setting aside dollars out of the health fund that are specifically earmarked to basically buy down or cover increases. We, meaning you, have collectively done that somewhat informally, over time. But this would be doing that in a more formalized, structured manner that, as Laura said, is very transparent and can be discussed and walked through from a committee standpoint. This approach can be a little tricky, to be honest, and so these are some of the things that we're trying to work through. Is if that fund, if anything ever happens to that fund and gets depleted and for whatever reason it's not replenished, then you can have whatever delta you have in, or whatever that fund was paying for, you can have some premium shock where you have to catch up. And so that's one of the things that is a little bit of a challenge to manage. But I do think we'll get someplace that I think will have some benefit to the district. The other one is less of a stabilization, but it does similar. It has similar type of outcomes, and that's this concept of a catastrophic claims fund. So, as you've heard many times, with the stop loss program that you have, and as Jessica nicely laid out, that protects the plan for any particular large claim, right? So what we're seeing now in the world of self-funded health plans is we're starting to see more and more claims where stop loss is excluded. And what generally happens here, and when this occurs, is when there is something that is large, catastrophic in nature, but ongoing. So insurance companies generally are there to cover unforeseen expenses, but when an expense is known and expected, like your homeowner's insurance, if they knew the house was going to burn down tomorrow, they're not going to give you insurance for it, right? Same concept happens in stop loss. If there's a known transplant, or what we're seeing right now, which are the really complicated and challenging ones, are known large specialty med claims, specialty drug claims, something we haven't really had to deal with historically. And fortunately, your plan hasn't been hit with this, but we've had a number of clients now where they've had $1-2 million claims per year that are ongoing. And so the stop loss carrier says, yeah, you got coverage the first year when it first emerges because we didn't know about it, but second year we're going to exclude that. So these are types of things that are starting to emerge more and more, unfortunately, to where there are some things we think that the district might do to set aside, again, some dollars to ensure that these large claims are almost sort of internally self-funded. Internally stop-lossed from that standpoint. So it's almost like creating your own little stop-loss pool, basically in simplest form. And then, again, similarly, how you replenish that fund when it's depleted, that's a little tricky. There's pooling concepts which is basically just a charge that gets charged to the plan, just like we charge administrative costs or stop loss costs. That's probably the most common way to do it, based on historical claims or expected claims that are going to be unreimbursable by stop loss. It's really the main concept. Sometimes this actually could even cover increased risk taking. So we, at our current deductible level, I think we're at 400 or 425 deductible for your stop loss. If that ever went up, if we decided to take that up to say 500,000, some of that's going to be more risk for the plan. So this fund could be used to help cover those costs as well. So again, those are the concepts that we're bouncing around. I won't say that it is completely exhaustive list at this point, but these are the ones that I think are going to most likely have the best value and best benefit for the district's plan. So still a work in progress. We don't have any timelines on anything at this point, but Laura asked that we come and just sort of talk with you about what we're playing with. Questions on any of this?
Rachel?
So as we're thinking about establishing something like this, are we thinking about establishing it as a piece of what comes out of the next year's set of premiums, or are we thinking of establishing it with some of the increase in the fund that we've been able to create in this last year?
I don't think that's been determined yet.
Okay.
I think both of those scenarios would be on the table for discussion, but we're not that far in the process at this
Okay.
point.
Thank you.
Diane?
I have a question, if you could expound a little more on the 2 million. In my mind, I thought that once a person, if they had a catastrophic illness, that once you reach 2 million, that was it, that you're done, so to speak.
Not exactly sure where you're going
Okay,
with that.
So you said something about 2 million, whether
Yep.
and then you go on. You have to decide if the person goes on, for other monies and stuff.
Okay, let me just sort of reiterate what I was saying, and then we can sort of fine tune where the question is. So for your plan, you have a stop loss policy that protects the plan, not the individual, but protects the plan for any claim that goes above a certain level. That level, I believe, is $400,000, meaning the district's plan pays the first $400,000 in claims, and then the insurance company that you hire to cover the plan pays anything above that. Okay, so that's stop loss. That is what stop loss, and it's for any individual covered under the plan for a 12-month policy year, and your policy year runs January through December. So it is protection for the plan in this self-funded world. But as I was mentioning, so when that occurs the first time in a given plan year, someone has a let's say that there's a preemie babies born. That's the common one that will sometimes run very expensive. Usually that's a one and done situation. The children are born, hopefully healthy, probably need a lot of support. But as you get through the policy year, it's covered. The stop loss carrier pays anything above $400,000, reimburses that to the district, and we move on and everything's fine. Where things have gotten tricky in our world is there are more and more claims that are going on year after year at those levels versus being a one-time expense. A claim that is $1 million a year or $2 million a year, that's where the insurance companies start to go, we covered it the first year because we didn't know about it. Nobody knew about it. That's what we're here for. But in the second year, because we know that is going to be an ongoing claim, we're going to change how we underwrite that, how we insure that. So we're going to raise the deductible, so to speak, from $400,000 to whatever we think the claim is going to be. In that case, $2 million in the example that I gave. So then it becomes not reimbursable. It's not covered by anyone but the district. So now we get into, you're now self-funding that entire claim instead of just the first $400,000. So those are the things that are starting to become more commonplace that, quite honestly, 4, 5, 6 years ago, we didn't really think about these things much. And now it's become a common, much more common situation.
Now I understand. Thank you
Yep.
very much.
Good question. I'm glad you asked for clarification. Anything else on this topic? Robert?
And I know it's probably, Robert Munson for the record, probably still kind of premature to think about, but is this something that if we can build a healthy fund there that might cause us to get lower premiums by raising our stop loss amount? Because we were at, I think, 250,000 years ago, and now we're up at 400,000. But with that increase, it's sort of a balancing act as to lower premiums, but now higher risk. And if we're able to build up a fund, then we can take more risk, but have lower premiums, which means we'll have more money to put into a fund, possibly.
Potentially, yeah. And that's sort of the trade-off is, we use the definition self-funded a little bit wrong because you're really not self-funded, you're partially self-funded. And most plans in the country are not fully self-funded. Some of the really big companies are fully self-funded. I mean, they take all the risk no matter what happens. And they do things like this. They have internal catastrophic funds to protect themselves, but they're funding it. They're managing it all within their plan. You actually buy insurance for those really, really big claims, so you're partially self-funded. But that's exactly what we're talking about is, does this allow you to take more risk? Does this allow you to, lower the premium you're paying to an insurance company, which is always a good thing? But you're then going to take the risk. Then we set aside these dollars. So this is where that, where does the money go? Does it go to the insurance company? Does it stay in the district to fund these claims? Which is the best use of those dollars? Great question.
Any other questions for Lloyd before we move to the next?
10 years on the committee has paid off, Robert.
Has it been that long?
I don't know. It's been a long time.
been a long time.
10-ish.
Well, Tom Marshall was before he went with you, so it's been a long time.
Anything else on this topic?
Okay, then we'll go ahead and move to the, is it 2.05? Presentation, discussion of Washington County School District Insurance Claims Experience Report as of August 2021.
So that's me again, Lloyd Barnes with LP Insurance. So again, looking at the month of August, we'll go through the claims report like we do every month. Exhibit 1, again, this is through August. Employee counts down slightly, about 2.4% to 7,200. Net paid claims on line 4, up quite a bit from the previous year at 5.4 million compared to 4.9 million last year, up about 12%. For a composite cost of 759 compared to 662 last year, so up about 14% on a composite basis. When you add in the fixed costs, which are pretty flat there at 1.2% over last year, that gets us a total plan cost of 5.9 million compared to 5.3 million last year, up about 11%, for a composite of 818 versus 719. So we are seeing some of that uptick that we have talked about, we've expected, again, comparing to 2020, which was a lower cost plan year, as we've discussed. From a large claimant standpoint, still running pretty well. We've only had to date 13 claims exceed the $200,000 mark, which is half of that specific deductible that we've been talking about versus last year. 20, again, it's still a little early. Those will catch up, and I'm sure we'll see a few more, and we'll talk a little bit more about that as we go forward. Exhibit 2, this is a little graph that we've been reviewing the last number of months. And you can see there that uptick as we enter into the second half of the year. It has gone up quite substantially, which, again, I I don't know, it's unexpected. We actually are seeing a number of our self-funded clients that has ticked up pretty much across the board for everyone. So I think we do have a couple of factors going on, which I've mentioned before. We are having a normalization and a coming back of utilization and care and people getting the services they maybe weren't getting. Hopefully, that we don't have too much more of an uptick from there. And then we are also, as I mentioned, seeing just general cost inflation with providers, with everything in healthcare right now, which is my bigger concern for the next year or two. So again, just pretty much consistent with what we've seen, but it is on the upswing. Exhibit 3, which are the all total plan costs for all plans combined, which is where I'll focus most of my conversation. So for the month of August, our employee costs on line 10 were $4,041,000. The dependent costs on line 18 were $2.3 million, for a total net paid claims costs on line 30 of $6.37 million. For a composite cost per employee for claims, $925.70. Adding in the fixed costs down below of $405,000 yielded a total composite cost per employee of $984.58, which is quite a bit higher. And you can see these last few months, basically May, June, July, and August now, all significantly above the 2020 average. And so that is what we're starting to say, okay, does that start to stabilize? Does that stay elevated? What ends up happening? So it's a little early for us to make a lot of assessments for next year, but it is starting to be a little bit on the concerning side, as those numbers have stayed pretty elevated for the last 4 months now. Exhibit 4 and 5, I'm going to skip over, and the next few. Those are the breakouts between active retirees for the PPO and the HSA. Generally don't go over those, but I will skip to the last exhibit, which is the large claims exhibit. Actually, we are at $425,000 deductible now versus $400. I apologize there. So you can see there that we do have 13 members that we are tracking over the $212,000 mark, which is not terrible for a plan as big as yours, but it is quite a few, and we still have a number of months to go as we enter into the last quarter of the year. As of August, we had only one claim that had exceeded the $425,000 level. So again, back to Robert's point, as this plays out, you start to, and this is something we do every year with the district, is we look at how much premium you pay for this stop loss insurance versus how much reimbursement you get back from the insurance company. And I will say, many years the district actually has won. They've actually paid less in premium than they've got back in stop loss. There have been years when it's been the other way, but that's the world of insurance that we get to deal with. So again, this gets more significant as we get to the end of the policy year, which is December, and then we pull our hair out and argue with insurance companies. Questions on the claims report for this month? Thank you all.
Okay, thank you, Lloyd. Let's go ahead and go to 2.06, presentation discussion of the Washoe County School District Group Insurance Anthem claims activity and turnaround reports as of August 2021.
Hi, Pamela Davidson from Anthem Blue Cross Blue Shield for the record. So I am going to go over, I can't really see your screen, I don't have my glasses. So August, right now, we had received 14,284 claims in the month of August. Out of those, there was 14,184 of those claims processed. Between the HSA plan and the PPO plan, the PPO was 848 of those, and the HSA accounted for 1,336 of those claims. Within the first 14 days, 98% of those claims were processed, and by the 60th day, the claims were processed at 99.96%. You also had, during that month, your RX claims were 7,178. And those are processed immediately upon pickup. Does anyone have any questions about the turnaround time on the medical and RX? Okay, we can move on to the dental exhibit. Dental is fairly quick and easy as well. In August, you went down. You only have 1,927 claims processed in the month of August compared to your summer months, and I'm assuming that's because most people are getting their work done in the summer. Within the first 14 days, you had 99.29% processed, and those all mandated have to be processed within 30 days. So you're at 100% by then. Anyone have any questions on the dental turnaround time on the claims? I think I had the easiest presentation.
I tell you, thank you very much. I appreciate it. And then 2.07, presentation discussion of the Washington County School District Group Health Insurance Wellness Program report to cover the current events and programs as of August 2021. You're up, Laura, right?
Yes, Laura Thurston, for the record. I'm excited. It's been a while since I've been able to report on wellness. So, and these are actually probably current events as of September, just to clarify. But it all starts in August. So again, we have our regular annual health assessment that has began as of August 1st this year. It's again through our Virgin Pulse portal. That's the online questionnaire that members complete in order to earn their $40 health insurance premium discount. And the deadline has also stayed the same this year. It's December 1st. Our wellness screenings are back somewhat, at least for this year. We had to cancel those last year given the pandemic, but we are able to offer them through Specialty Health this year, which is one of our local vendors, specifically at their location. We're unable to offer them at school events, or school sites, excuse me, unfortunately, but we have Saturday events, and you'll see the dates here. You also can go online through Specialty Health and choose any time at their location or also through a LabCorp location. So there's a lot of availability. We just don't have the school site locations this year. We're offering the same options that we do most years, the lipid panel, the glucose draw. It's a finger stick this year versus venipuncture, unless venipuncture is requested. And then similar measurements that we've done in the past, such as BMI, blood pressure, height and weight, things like that. Those events also have our flu vaccinations or immunizations in general, I should say. So we offer flu, the high-dose flu if you qualify for that, Tdap, pneumonia, and shingles vaccinations as well. Those are currently through Walmart, who we've been partnering with for the last few years. And you can also go to any Walmart pharmacy to receive those as well. And appointments are necessary for wellness screenings. They're not necessary for an immunization only. And then lastly, we have a challenge coming up through our Virgin Pulse portal again. It's a fall step-a-thon, so it's a step challenge. It begins October 18th, so you'll see advertisement for that coming out soon. It's a shorter version. It's 3 weeks, so we kind of pushed it off just a little bit this year, given kind of the smoke. We wanted to promote being outside, but at the same time it was kind of difficult. So I hope we're going to catch a few good weeks here. So we have top 10 teams, and the top 10 individuals will earn Virgin Pulse points. Those points can be eventually cashed out to gift cards and things like that on their online accounts. There's also going to be a raffle of 10 raffle prizes for $50 Amazon gift cards. And those individuals who averaged 7,000 steps a day will be entered into that raffle. Any questions? Okay, thank you.
Thank you. Okay. Now we're moving on to our closing items. 3.01, public comment. Is there any public comment? Okay, seeing none. 3.02, announcement of our next meeting, which is October 27th, 2021 at 4 o'clock. And I assume it's still here unless things change. And then 3.03, adjournment of the adjourning the meeting. We are adjourned.